Welcome to the Treasury Update podcast, presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in.
Welcome to the Treasury Update podcast. This is Craig Jeffery, your host today. The topic is ISO 20022, and the session title is called From Compliance to Competitive Edge, Treasury's Opportunity with ISO 20022. As the November 2025 ISO 20022 deadline approaches, Treasury teams face a pivotal moment and an opportunity to not just comply, but to transform. This podcast explores how forward-thinking organizations can leverage ISO 20022 to streamline operations, enhance data quality, and unlock strategic value across payments and cash management. Well, I am delighted to be joined by Mayank Randev from TIS. Mayank, thank you for joining the Treasury Update podcast.
Pleasure. Thank you for calling me.
Maybe we should begin with the ISO 20022 background. So maybe you can just give a description. I think most people who are listening probably have at least some familiarity with it. Some may be experts, but what is ISO 20022?
Yeah, absolutely. I also believe most people tuning in know what it is, but when it comes to someone who isn't aware, just for background, the ISO 20022 is an international standard for electronic data interchange between financial institutions, which basically means it defines a common language that applies to payment instructions, security transactions, trade finance, forex, and any other communication using common terminology. If I were to draw an analogy from daily life, we all are aware of acronyms of texting on the internet. Everybody knows LOL stands for laughing out loud. But recently I found out some people might interpret it as lots of love. So in order to not have this ambiguity, and that terms like payee, beneficiary, and creditor are broadly the same thing when it comes to making payments, the International Standards Organization, along with experts from the financial industry back in 2004, established this global standard.
So this standard, ISO 20022, in Treasury, there's several XML interpretations of that or uses of that. Can you just quickly go through what that is, or maybe a couple examples to put a hook in it?
Absolutely. So when it comes to Treasury specifically, if we divide that into two main areas, payments and cash management, that translates to the messaging standard used for payments, which is predominantly the PAIN format, PAIN. And for cash management, there is the statements, which are translated into what is called as the CAMT, CAMT format. And those are predominantly used as a global de facto, and that's where we're moving to initiate payments, which is the PAIN message, and to receive transaction information and statements, which is the CAMT format.
In the lead into this discussion, I mentioned that there's a November 2025 deadline. What's the deadline about in terms of how does this impact banks and how does this impact corporate treasuries, corporate payable groups?
So the fact that, as I said, the standard has existed for fairly long, since 2004. However, it has been adopted in different phases across the world. There are different countries and payment instructions that are adopting the standard differently, starting with back into 2022, Target 2, which is the European interbank settlement payment infrastructure. They adopted it. The big push, however, comes from SWIFT because, as you probably know, the majority of the cross-border payments go over the SWIFT network. And this impending deadline of November 2025 is when SWIFT would stop the MT messages, which were the old message formats for cross-border or interbank communication for payments specifically, into these new XML ISO 20022 formats. And that's why this specific deadline is important. However, the transition has been ongoing for a while now, and it will continue in the future as well.
So on the bank and the corporate side, if a corporate is a member of SWIFT, they might be originating an MT 101, a message type 101 for sending a high value payment, a wire of sorts, and then a MT 103 for bank to bank. You discussed the impact on the bank side. What about the corporate side? Let's say they're not a member of SWIFT, but they're going to be sending things to their bank that the message will be carried over SWIFT. How is that an impact? What will the impact be on?
Sure. And just to put a little bit more color into the impact on banks as well, right? Because obviously it's a massive change into how banks communicate or how banks send messages to each other. As you said, they typically use the MT 103s for payments or even the 202s. And now with this change, the biggest impact from my perspective is that there is some element of operational complexity in terms of migrating their legacy systems or to at least adapt their legacy systems, which are not natively supporting those standards to something new. So that's for me a big operational impact. But it's also an opportunity for banks because it allows them for better visibility into their data. We'll talk about it probably more, but the data element of these new formats enables better visibility, transparency, and analysis. And that's what is an opportunity to banks. Coming to corporates themselves, there is no deadline for corporates. So they have this leeway on one side that there is no immediate deadline, and the deadline impacts banks. However, there is an urgency because of that ambiguity, the banks have decided to treat corporate communication differently. So some of the banks may continue to receive the old message types, even if they have been reduced from a interbank communication perspective, like the MT101s, or some banks might send statements only in a new CAMT format and not allow for sending statements in the MT format. So that's something that the corporates need to be aware of, that unlike the banks, they need to analyze and understand what the impact is in terms of those payment instructions, because corporates are sending banks different formats still, and there might be at some point a consolidation. Actually, there is a push towards that consolidation, although there is no deadline.
The changes in what has to be included or how information can be sent over Swift and other systems, like the address might need to be broken out into the component parts, or more distinctions on payment descriptions. Those continue to change. And those, if a corporate just could continue sending things exactly the same way they were, and there were no additional requirements to include more data, more information, or include it separately, then they would probably be fine forever. But maybe you could talk to that about how, even if there might not be a deadline, how important that is to make sure your payment platforms are flexible, and maybe you have other examples besides the address being spiked out too.
No, I think that is a very valid point in terms of how corporates need to adapt. So, of course, the first thing is to understand where there might be changes, but even from their master data perspective, in terms of how they maintain the data, as you said, the instructions in the new format need to have a more structured data, especially for the address, and that needs to be incorporated into how they are currently storing the data within their ERP or treasury systems. The same is also then applicable when they receive the data back, because currently, if they receive a normal MT940 message as their balance or bank statement, when they have a more richer CAMT format coming back, the remittance information might be more structured. So those are things that they need to be aware of and to adapt. And that would definitely also lead to some technical adjustments on the corporate side when it comes to adjusting. So you're right that there is no impending deadline for the corporates, but there's always an impact that they have to be aware of, both from a process perspective, but also adjustments to their systems.
This idea of complying, or following what are base requirements or transforming, it sounds like there's an opportunity. What's the difference in perspective between I will do what's minimally required to meet, let's say, payment standards versus I will transform what I'm doing? How can we think about that? What would you want a banker to know or a corporate to know?
Yeah, so I would take another example here in terms of, again, sort of a texting example. I love those, right? When you're communicating with the business partner, you can use a regular SMS if you want to send them a text, or you could use WhatsApp. And the difference here is the difference between complying and transforming. The SMS does its job. It is able to send the message that you want to send to the business partner, but it has limited capabilities in terms of, let's say, the length or the kind of data that you can add to it, or how you can embed other processes into that entire end-to-end experience. Whereas if you use WhatsApp or a more social media sort of texting capability, it gives you leverage on automating not just the text, but also other elements of your process. And that's, for me, the difference between how banks and corporates can look at it when it comes to compliance only. For banks, if they only want to do the bare minimum, they would typically just, or they would have already done it actually, is just to apply a sort of a middleware in between that just does a transformation from the old message format to the other format, or just deploy point solutions in countries or in geographies where it was applicable. And the same when it comes to corporates, there would be minimal upgrades or changes to their infrastructure and systems, and not really change any of their processes or not leverage the richness of the capabilities that this new standard offers. Whereas when it comes to transformational elements, banks would look at it as an opportunity to have a full technology overhaul even within their payments infrastructure, which allows them better customer experience for their end customers, but also better resilience on their operations internally. And the same thing when it comes to corporates, they might want to implement centralized platforms, which enables them to have better connectivity, better straight through processing in general. So those are two different perspectives. Complying is just getting like the minimum out of the way, just making sure that the communication goes through without worrying about operational resilience or about how you can improve your process, how you can use that as a differentiator to incorporate better processes downstream.
Yeah, thanks for that. I want go in a little more depth on resilience a little bit later on in our discussion, but maybe, Mayank, you could give us just a quick overview on what is TIS, what do they do, and what is your job there? What is your remit? What are you responsible for?
Yeah, sure. So TIS is Treasury Intelligence Solutions. We offer point treasury solutions focusing on payments and cash management. As our tagline says, that we reduce complexity and handle payments and cash, simplifying that process when it comes to centralizing, for example, all payments processing, large corporates which have complex banking infrastructure, to allow for maximum connectivity in the most secure manner and to also process payments seamlessly. And then on the cash management side, we provide point solutions focusing on cash management and forecasting. And my role specifically is to focus on our customers and look at their requirements and provide solutions. So my role is of solution engineering. I'm the director of solution engineering here in EMEA, and I focus on looking at how to simplify and make our customers' journey when it comes to payments and cash management more seamless.
So we're talking to the right person, which is great. The idea of from compliance to competitive edge is something we've talked about, but what do you see as the opportunities, both immediate and over time? I know you've covered some of those, but maybe speaking more broadly into how we can take advantage of the opportunity rather than just change with what's required.
Yeah, absolutely. And I think the main opportunity, as I said, for banks is the ability to have a full overhaul, look at their processes, because many of the banks have legacy infrastructures where systems are really old, not really tied to the digital world or catering to the digital world. And one of the key elements of this format or this standardization is also to look at it from the future, right? To see how payments can be more digital, can be more real time, can have more seamless effect globally, not just within a region or within a country, but globally. And that's something that banks definitely can use as an opportunity to build on that and provide a good base for their customers. And when it comes to corporates, I think again, overall, corporates can get improved interoperability when it comes to payments processing. The standard brings the opportunity of enabling communication across, regardless of technology and location. In terms of data and insights as well, the corporates have better data, better remittance information, as I gave an example before, which really supports reconciliation capabilities. Straight through processing, again, is an important element both for banks and for corporates, where you have machine readable data, going back to my example, where you know exactly what each data tag in a particular message means, rather than manually having to interpret or writing some sort of bespoke code to interpret, which means every time there is changes, it would lead to some sort of friction in the process. So that entire interoperability, better data for better insights, and straight through processing would be the most important takeaways. When it comes to other elements like integration as well, this standard gives you the opportunity to have better seamless integration. Again, the ERP systems traditionally were not built for bank communication, or they were not built for complete digital end-to-end landscapes. And that's something that is a big opportunity, where you can have a seamless operation where you have an invoice that needs to be paid, and you send the instruction to a system like TISs, for example, which is the payments hub, which would then transform that into the correct XML message, sending it to the bank seamlessly. So those are, again, big opportunities for the corporates. And all of this is also providing a secure environment, right? Because when it comes to manual intervention of payments, we've seen that there can be errors, there can also be risk of financial crime, and those things are really more secure when done in a technologically secure environment where there is security across the board in the system to system interaction. So that also is another big opportunity to ensure that there is no risks of such financial crime, or risks of manual errors are not there. And finally, if I were to add one more thought here, is about really future proofing the entire landscape, both for corporates and banks as well, where, as we know, technology is evolving, and we have different types of integration mechanisms. And this provides a platform for global communication. It's not just limited to a country, it's not just limited to a region, and hence it allows for any bank to be able to communicate, any corporate to be able to communicate financial information across the board, which really brings the world together. Because in the past, as you probably know, each country had their own standards, their own messages, and there was no cross pollination when it came to financial messaging. And with this, it gives you that ability to bring all of that in.
It was surprising to me coming out of a corporate environment before moving into the banks and then into consulting to see how much communication goes on behind the scenes and how many in-country payment platforms are there and all the moving parts. It's sort of like this mysterious cloud. You send something and then it gets somewhere else, and you don't necessarily know how much that data is transformed, how it moves, the movement of the message, the movement of the funds. Very surprised. This simplifies so many of those handoffs.
Absolutely.
Let's get specific with payments and cash management. Let's start with paying or payment instruction, the PA from payment and the IN from instruction. What would you say are some bigger improvements for payments?
As I've said multiple times, the first and foremost improvement is the ability to have a straight through process. Let me take an example of the new format. In the new format, there is more structured information. In the pay-in format, for example, the remittance information is more structured, the addresses are more structured, which gives the ability for the downstream processor to be able to read that and process it seamlessly. In the past, most payments that were cross-border were always stuck at one bank or the other because of some data that came in a particular format that didn't match what that bank expected. And then people would have to go look at it manually, demystify, and process. So that is a big change in terms of how payments are processed.
One quick question I just want to clarify. When you say more structured, are you referring to like the instead of having like a big open field that has, let's say, the address, street, number, floor, all that stuff in one field, that the structure means that those can be broken out, the component parts can be placed in their own container, and therefore that structure is richer and easier for other systems, or are you talking about something broader or different than that?
Yes, that is definitely one element of it. So the structure, for example, as you gave the example of the address itself, instead of having one long text field, which had everything from the street to the house number or building number to the zip code as well as the country and the city, now each of those are specifically separate fields. So you know exactly which city, which zip code, and which country that particular payment is for. And then, of course, the system can also decipher the street. And, so the structured address is definitely one of the big elements of the format. But there are other parts as well, like remittance data, invoice numbers or tax fields. In the past, you would have just like one reference field in the MT formats, for example, but also in local formats in other countries, you would have to just adapt the standard structure into something where you wanted to add that information. Now it's very clear you have different types of remittance data and they are not really free text. So the moment that anything is free text, of course, for a system to read is going to be hard. Whereas here, there's literally a tag for every possible information. Doesn't mean you have to send everything, but there is a possibility to get to the lowest level of detail and granularity when sharing that data with your bank.
And for those who don't look at these formats or have a view in mind visually, the reference to the tag, if you had a street number or the address had the number on the avenue that you're at, in the older formats, it may just say 100, or if it might be separated by a comma. And so, position 12 is the street number. Whereas these tags, it'll say, I don't think it's a street number, but let's say address number. There's brackets around it that say it's address number, start and beginning. And so it comes with the hello, my name is Greg, or my name is Mayank. So each of the bits of data comes with the description, which is pretty amazing that it has that. And we might think that always should have been there, but it used to be a fortune to send data. Now it's almost free, so that your description of it being richer and comes with tags is really powerful in the receiving system too.
Yeah, absolutely.
So I cut you off a little bit. You were still continuing when I did that little discursus on the tags, but go ahead.
Yeah, absolutely. No worries about. Then, in terms of other specifics when it comes to what it means for world of payments, again, the data itself serves very well to support regulatory requirements like anti-money laundering and know your customer, as well as sanctions screening. With that data, it is easier to detect if there is any payment that is being made which shouldn't be made. And in the past, you could hide some of that information potentially, whereas that is something that today with this allows for better controls. So that's again a big benefit both for the corporates because you don't want to be initiating a payment to a fraudulent party or to a sanctioned party, but at the same time, more importantly for banks as well, because it really reduces compliance risks without having to spend a lot of money on resources and ensuring that everything is double checked and triple checked. So that's definitely another big advantage from my perspective when it comes to payments.
That was a great explanation on the payment side or the paying format. To the information reporting or cash management side or CAMT, CAMT, where do you see this move to ISO 2022 helping in that area?
Yes, so the CAMT or the CAMT format is replacing the MT 940, 942 type of messages, which are the statements that you receive from your banks. And historically, again, it is something that is important for corporates to receive that information to see if the payments that they initiated have been made, to reconcile with invoice payments, and to see that their overall operation is working. With the MT format, as we discussed with the MT 101 format, the difference is that, again, there is more structured information, better ability to automate the reconciliation process, and again, better interoperability. So you don't have to worry about when you change your system or move to a new system, whether that would be able to still recognize the formats or the information because it is now provided in a structured way. Again, taking the example of the remittance information, which would have typically the invoice number. In the past, with the empty format, that was just a free text field, and you could put anything in there, and each corporate had to define logic for each bank statement to see what that resonated with. I'm not saying that goes away completely. To be fair, that might still be there because banks may still use different versions, but it is definitely more streamlined. And that affects the reconciliation of the corporate in terms of seeing, yeah, all their payments have come in or gone out, all their invoices have been paid out, etc. But then moving to the next level when it comes to planning and insights, it also helps them with their cash planning because it helps you to have more granular data to really know where money will be or where money is and how that's going to affect. So, from a forecasting perspective, for example, or from a working capital planning perspective, it gives you more flexibility as a corporate to identify transactions, to allocate transactions without having to do a lot of manual or bespoke work.
Yeah, that is, if you use it for reconciliation, cash application, or categorization, that makes a tremendous amount of sense. And the fact that it is richer data and more data can be included is pretty logical. And if we think downstream somewhat, this is I'll just call it speculation or a logical extension, perhaps. If there's more of this data coming in, we may use it in an existing cash application system, reconciliation system, ERP, treasury system. Wouldn't we also be able to take that richer data and stick it into a data lake for which we could apply our business intelligence tools, or it sounds like it makes the data more valuable, and that's a perfect application for that. Is that accurate, or would you nuance that more?
Yeah, absolutely. I think that is also a big advantage when it comes to that rich data set that you can really go deeper in terms of the granularity of not just reconciling for your financial processes and treasury processes, but overall for your business and applying business intelligence on that to see, okay, what are the trends? How does that impact my day to day in terms of the business? And what are the factors that trigger changes? So if you look at your data when it comes to transaction information, it really goes to a very granular level, and hence you can apply that financial transaction information to make business impact or business decisions and flow downstream, as you said. So I would agree that is definitely a use case.
Yeah, thanks for going through that. Before we move on to what is a corporate to do, I just wanted to go through a couple of the CAMT items. Correct me if I'm wrong on any of them, but you have message types coming out of Swift. And so MT940, MT942. In the US, you have BAI reporting. Prior day and current day still comes across in the same format in the US. So it's BAI2 for prior and current day. The MT940 is prior day. The MT942 is current day, so intraday reporting. Those can all be fully replaced with CAMT messages. So CAMT 052, 053, which one is prior day?
So the 53 is the prior day and the 52 is the intraday. And these both are definitely replacing those with richer data. The amount of information that you had in the MT940s or the BAI for that matter was limited or is limited.
And so CAMT has a rich hierarchy of identifying types of transactions with like three groups of categorization. People from the US who are used to BAI, there's the 3-digit BAI code, which is very specific. And so there's a number of banks who can provide or enrich the CAMT message with a BAI code. So you can get both sets of data, both categorization types. So this transition can be pretty easy, whatever your history is from, coming from MTs, BAIs, or a combination.
Yes, so as you said, the categorization of the transaction types is more richer in the CAMT formats because it has a 3-level code. So there is the type of transaction, but there's also a subtype and a sub-subtype or category. And those 3 categories can really define to the lowest degree what that transaction type is. Whereas in the other formats like the BAI, as you said, has a 3-digit code, similar in the MT, which has a 3-character code, which gave you some information about the type of transaction. So if there was a interbank transaction versus a regular payment, you would be able to differentiate, but you would not go to the lowest level, like if there is a specific fee or a specific interest or a specific charge, all of it would be one category. And here in this new format, you have that differentiation that any bank fees are further divided, just as an example, but also all types of payments. So that granularity, again, comes with the ability to really distinguish what a particular payment was made for.
As we head towards the application standpoint of today's discussion, what action should a corporate take? What should they do? How should they think about ISO 20022, the new standards, the new formats in their environment?
Yes, I think there are 2 elements to the actions that a corporate should take. If I could just divide that into the communication between the corporate and the bank, and then the communication within the corporate, which is, I would say, the intrasystem of the corporate themselves. The first thing is, as we discussed, there is no deadline per se when corporates need to migrate, which comes with the challenge that each bank is actually dealing with it differently. Some of them might be mandating that corporates send them and receive these XML formats, or there might be banks who are more flexible and they allow for coexistence beyond the November deadline. And hence, corporates need to be aware what their banks are thinking about. So that's the first step. The second step would be to also analyze their landscape. There are systems which are not really modern, still in production or still being used by corporates. And corporates need to assess their systems landscape and see their accounting systems, ERP systems, treasury systems, just as an example, everything that deals with any sort of financial communication, what is their status in terms of being able to access or to produce these messages. So that is the second step in terms of the assessment. From my perspective, that is really the first step or the main action that corporates need to make. And based on that, then they can decide what the next step can be, how they can decide if they want to comply, transform, or a combination of both. Because again, whilst it's all idealistic to say, yes, we need to transform, sometimes there is the element of urgency, there's the element of costs associated with it. So once they have the full assessment, they would be able to make a better decision of what the right strategy for them is in the medium term and the longer term.
Very good. I'm just thinking about the build, buy, or partner. And I don't want to. We can't turn it into a commercial, of course.
Yeah.
But let me ask this. TIS is a provider of these types of conversion services, payment services. How do people make the decision between building something on their own, making all the changes within their underlying system or systems, versus using tools that help with the transformation and isolate some of those changes from, let's say, 5 or 6 or 10 back-end systems? Any thoughts on that?
Yeah, I think each corporate has their own priorities. So if when you assess your landscape, deciding to make changes in-house obviously gives control to the corporate in terms of what they do at what timeline, but it is typically the most expensive option, if I can say that, especially in complex infrastructures. And it was also limited in terms of future proofing. So yes, you can have it as a immediate action that you can take, potentially faster, but then there would always be the ongoing impact that you have to assess upfront. The other option is also to leverage infrastructure from banks, actually, which is also something that some of the banks provide, but that's bank specific. Doesn't give you, if you again are in a complex environment, in a multi-geography setup where you have to deal with banks in different countries, again, it leads to less flexibility. And that is where corporates decide for a solution like TIS because it gives them that flexibility and ability to decouple the complexity whilst at the same time having continuous or future proofing of their transaction processing. So when it comes to bank connectivity, be it for payments or be it for the cash management or the CAMT formats, a system that is offering it as a SaaS solution that sits in the middle of the internal systems of the corporate, which are business critical, and then the banking landscape provides them that flexibility. And that's what corporates use to decide for a system like TIS.
That's really helpful, Mayank. I always think it's important for people to think through where's their value and how you might do that, and then what are the decision points. And those are great topics. There's a lot to take in and think about from a data activity system perspective, as well as analytics and reporting on top of that, because there's newer, richer formats. We want to take advantage of that, get better data, more data in a better structure. Do we have to do that? Which way are we being driven to? We're all being driven to this era of XML, ISO 20022, and there's opportunities for that. So do we, like you said, do we just do compliance in the bare minimum to get by? Or do we use that for a competitive edge? And I think that was really helpful discussion, Mayank. Thank you for joining the Treasury Update podcast.
Pleasure to be here. Thank you.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.